We see everything down for the day on Thursday, but that doesn't mean the week is down on everything. The S&P 500 and the NASDAQ 100 still up for the week. Another nice up green candle for both the S&P 500 and the NASDAQ 100. We're going to jump into these charts and tell you what we see happening and hope you are seeing the same. You are following the charts with us every day as you need to do. 10 minutes is all we ask. Why? Because 10 minutes is what it's going to take to go through these four charts to really try to figure out what's going on the weekly, the 2-day, and the 4-hour, and to get a feel each and every day for these individual charts on the 4 ETFs that we follow. Because that's what you have to do if you want to master charting. And what does mastering charting do for you? If you can follow stock charts, you can literally follow the trends. The world's your oysters, my friend. And it just takes you spending some time with us, learning how to do this. Practice trading using our trade worksheets available in the show notes. If you're not already subscribed, go do so at chartingwealth.com for free. Of course, if you want to purchase our book, it's available. You can find that in the show notes. 8th printing's coming in hot from the presses tomorrow and going out to everyone. If you'd like a copy autographed, we will send it out to you. Follow the link in the show notes to that. And also, if you're a Patreon supporter, go ahead and get your questions in for our once-a-month call-in. And that is a live call-in. We'll also be reviewing the stocks that you are interested in us reviewing for you. We'll go over several of those. If you hadn't put your request in, go ahead and do that. Now, let's jump into these charts for the day. Like we said, S&P 500 continuing to head up, green up candle, derivative oscillator gaining upward momentum. Price percent oscillator still heading up quite nicely, although down for the day on Thursday. Doesn't mean the whole week's down. The latest 2-day candle that's drawn is showing us a pullback for sure. And again, that's happened previously in these up moves since the weekly vertical crossover. What do we see going on though? It's a doji, means lots of indecision or Heikin Ashi candlesticks. Great training available at the website, Heikin Ashi, Heikien-ashi, means average pace, I'm told in Japanese. 105,000 people the last time I checked have taken that training available for you. What do we see going on with the price percent oscillator? It's flat. Derivative oscillators losing momentum. So again, cautionary note if you're continuing in that up trade that's done very, very well for you. Don't have to pull the plug yet, but be cautious. What do we see really happening for the last day and a half? We see a sideways slide, derivative oscillator gaining downward momentum, price percent oscillator. Price is still above that 2-day trend line. Could just be digesting previous gains and getting ready for some more up move, but pay close attention. Keep your eye on the prize. And again, just continue to watch. And remember, it's those bigger charts after we jump into a trade that we continue to look to. So we're going from the S&P 500 to the NASDAQ 100. NASDAQ 100 also nice green up candle going into the 5th week of up movement since the weekly vertical crossover. You can see the derivative oscillator is losing some steam. Price percent oscillator still heading up. We go from the weekly to the 2-day. What do we see there? Again, flattening out. Also, like we saw on the S&P 500, derivative oscillator losing momentum. We see on our Heikin Ashi candlesticks. And remember, we're using all these indicators from the candlesticks to the price percent oscillator to the derivative oscillator at the same time, along with our trend lines and Bollinger Bands. And again, the book explains all these things and why we use them. But we keep this as simple as we can. All we're trying to do, my friends, is figure out if stocks, ETFs, whatever it is that we're tracking is going up or down, and it's going to go on longer. That's all we're trying to do. Never forget that. All you're trying to do is forecast what's going to happen. And the best way to do that, and again, we don't like using that word forecast, but we use it. What we're really doing is trend following. We want to find a trend and follow it. And when you see strong trends, they typically go on for a while, particularly on that weekly chart. When you have enough energy for a crossover, typically means that's going to go on for a while. That's why it's so powerful. Bigger charts, bigger money. That's what you need to practice. The day trading and all, that's not what we teach. Those are small charts, small money. We're talking about big charts and big money. That's what we want you to practice. So we see that the derivative oscillator, again, losing lots of momentum, and that doji is sitting right on the 2-day trend line. Don't know when that's going to cross over negative. And the price percent oscillator still decent enough. So we go from the 2-day to the 4-hour. We can see down movement in the morning and then a green spinning top in the afternoon. Both these mean indecision. At the end of the day, indecision tending up, but that price percent oscillator heading down, derivative oscillator spiking down. So we'll just continue to keep our eye on the price. If you're in that trade, not telling you to pull it, just telling you to pay close attention to price and just see if things are going to keep moving up as they have for the past 5 weeks. That's been a beautiful trade for us. Practice trade, of course. We're not a stock calling service. We're an education firm. We want you to practice with us. TLT 20-year bonds, of course, over the course of this week, pushed through. And that's a strong push through, going down, pushing through our weekly trend line, derivative oscillator losing momentum, price percent oscillator heading down quite strongly. Go from the weekly to the 2-day. We see on that 2-day chart, the latest 2-day candle, really strong down. No wick on top, strong wick on the bottom. Red, we see lots of red as far as the derivative oscillator, and the price percent oscillator spiked over, going down. So we don't have a trade. 20-year bonds haven't for a while. Biggest reason is the 2-day is going down, the weekly's going up. When we have that bit of schizophrenia, divergence there, we don't have a trade. We have to have our intermediate and long charts going in the same direction. And then, of course, we want our 4-hour chart to, of course, start moving in that same direction. Also, we see for the last 2 days strong down movement, mornings and afternoons, on 20-year bonds, waiting for that to sort itself out. And of course, we don't trade when there's no trade. First rule of trading, don't lose money. Second rule of trading, make money. Back to the weekly chart, going to gold. You want to talk about a beautiful chart? Let me stretch this chart out for you for about a year. What do you see there? You see some really beautiful charting. You want to know which way gold's going? Look at our weekly chart. It will tell you time and time again whether gold is going up or down. Now, what do we see here recently? Well, we see a real slowdown in gold's upward progress. We have a red doji, and we're still above the weekly trend line, so it could be digesting some gains. Derivative oscillator losing momentum, as we said, price percent oscillator heading down, hasn't crossed over though. What has crossed over, of course, is our 2-day chart with this latest candle. It has crossed over going down, but again, price movement still above that weekly trend line. Derivative oscillator gaining downward momentum, price percent oscillator heading down. Of course, we don't have a trade in gold at that point. Kept hoping that 2-day wouldn't cross over and might have a trade in gold. We don't. We see strong down movement the last 2 days. That's 4 4-hour candles heading down. And again, we'll just continue to watch and see how gold sorts itself out, just like we're waiting to see what's happening with TLT 20-year bonds. But of course, we've had some great trading opportunities, practice trading, practice investing opportunities in the S&P 500 and the NASDAQ 100. Folks, that's where we are as we end the week. Haven't purchased the book, you need to do so. You help support the channel, and you get the kind of information you need to understand the common sense stuff we do here at Charting Wealth every single day. Lots of great trainings available for you at the website. If you're not a subscriber, subscribe. You'll get every day the daily market reviews that we do, about 10 minutes worth of training that you need to do every single day. You'll get links in the show notes, daily market, weekly market, trade worksheets, along with all the other great stuff we have, and all sorts of great training at the channel, chartingwealth.com. Link in the show notes to become a Patreon supporter. Like we said, Patreon members get those questions into us along with the ETFs and stocks you'd like us to review for you. You want to be a part of that group? Sign up and become a supporter. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.